Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market started out the week relatively calm. Everybody was waiting for the Fed announcement on Wednesday and Powell's press conference. Wednesday, the news finally did come out, and markets did what they always do. They confuse everybody. First reaction was a super dovish Fed sent the markets up very strongly. And then, surprise everybody, the markets closed weak. So a big gain on Wednesday turned into a pretty sizable loss. But then panic set in both directions. Thursday saw the market explode to the upside as buying seemed like it was going to be never-ending and relentless, and we saw a huge gain. Everybody was happy. The Fed game was on. Stimulus was on, and the Fed was plainly on pause. Then Friday came, and we saw some weak economic news come out of Europe and here out of the United States, and the yield curve inverted, and the markets went into panic again, this time on the downside. This time, this world that we live in is one of the most bizarre periods that I've seen in my 45-year career in the financial markets and as a trader. Powell says the economy's good, inflation situation is good, the job situation is strong, everything looks good, but the central banks are in crisis mode. The ECB, the Bank of Japan, well, they never left crisis mode at all, and the Fed now is done at 2.25%. That's a level of interest rates that they hardly ever used to get down to. Now they've raised them up to that level, and they're done. And they are reducing their runoff of the balance sheet and then planning to end it in September. So now with the markets here on Friday moving down very sharply, they might not even continue running off their balance sheet at all. Who knows? Besides the chaos that's coming out of the UK and the Brexit, the information that came out of Germany and France really is horrible. The PMIs there are just absolutely crashing. So that's really the truth of what's going on, and the deeper truth may be that the Great Recession from 10 years ago is still on, especially in the rest of the world. We managed to inflate out of it here a little bit in the U.S. and benefit from the tax cuts. But the central banks, well, they're still trying, and their drug is losing efficacy as there is a clear slowdown here in the U.S. and the rest of the world. Well, it's in really bad shape. They are essentially doing everything that they can to get us to take on more debt as the governments take on more debt, more drugs, more ways that we can stimulate this economy and put ourselves deeper and deeper in trouble. It's outrageous that our president here thinks that the Fed racked the possibility of having 4% GDP growth when this economy can barely hold 2% GDP growth with all of this stimulus going on. And this is not over as far as what we're seeing here in the central banks. They're going to do everything that they can to erase the economic cycle. The hubris that we see out of these central banks, these especially here out of the U.S., is just unbelievable, as they do everything they can to get the investors plain out sucked in to buying these markets. The buying that's going on in the bond market now on the end of the week is really a tell. Money is really looking, especially here on Friday, like it's flowing strongly out of stocks and into the bond market. That might be a big signal. And Thursday's rally here in the stock market could have been, well, a big suck in and a big top as they hooked the buyers into coming in. We recently did a video, and I want you to watch that video, which looks at the correlations between the equity markets around the world and the U.S. market. And when I looked at that, it was because I thought it was important that I did, based on the fact that the U.S. market had come up so far beyond the level that I was looking for the rally right now. In there, I talk about the fact that while there may be some change and a lengthening out of the overall topping pattern that we have here going on, I think, in the markets, in the stock market, that there is very likely going to be a strong correction that comes down into late May or June. And I really get a sense that we've seen the top of this rally now. And I point that out in 15 other equity markets around the world. We might have a big correction in here, as I've been looking for, and then maybe try to get another rally out into late summer or the third quarter. But I think it's just a big suck-in for investors as they get drawn in again and again into these markets that are just set up for a very, very serious long-term problem going out. We still think that out to 2020 is a lot of trouble for all of these equity markets, and in the meantime, we're likely to see very significant gyrations going on all around the world. Right now, I think we're starting a very significant downside correction. Let's take a look at what happened in the stock market as we look at our 60-minute chart of the S&P 500 for this week. And you can see it's actually, there's a big megaphone that's formed in here that you could see as you got these higher highs going on over here and these lower lows going on over here. And megaphones are often market directional changes that you can see in there. For this Monday period, you can see overnight here, the Trump-Xi meeting was kicked till June or July, and that got the markets a little softer. I was surprised it didn't bring anything bigger than that, but markets really wanted to firm up into the FOMC news. Here you had this rally coming on twice here on Monday. Here on Tuesday, or Monday night, Tuesday morning, the Eurozone growth was downgraded. But we still had the stocks jumping in that area. Factory orders were weak here for the third month in a row, and that brought some selling in right over here. Early before that, the stocks were really strong overnight as they were looking for this Fed news to come out and raise the markets as it always does. But here we had a lot of selling that was coming in on Tuesday. The late in the day, Tuesday after the close, the FedEx earnings came out. They were a big miss, and that is a world economy warning when you see that. And here also on early Thursday morning, Japan economy was downgraded again, and the Eurozone was weak. UBS warned, and the stocks that in Europe that were in investment banks were really weak, and we were looking for a downturn in those stocks as Goldman Sachs actually got up into our sell area. U.S. financials began to fall, and I'm going to show you the XLF a little bit later on in the show, and you'll get a sense for what's going on in the financials. Here was the news release over here in the afternoon. The markets were selling off into the FOMC news, and they came out super dovish in this bizarro world that we're living in with supposedly everything fine in the FOMC in crisis mode. No change to interest rates, of course. A no rate increase. The GDP downgraded to about 2%. The balance sheet runoff reduced and expected to end in September. Well, the stock market saw that and took off and sold off very hard. This looked like it was a failure, right? Where at that point, but then Overnight, we had the Eurozone going down on this scary Fed decision and commentary. What could possibly have them doing that at this time? But here we had something that was perfect. Micron jumped strongly as their earnings missed, but they cut expenses. They were pushing up the other semiconductors. And I'm going to show you the SOX index also today as we get into the best and worst for the week. I'm going to show you some of these ETFs. Apple got upgraded again and jumped a 3.5%. And this move up on these low interest rates really sent the Russell to the upside strongly. Now, that Apple move was based on an announcement that's coming out on the 25th of March about their streaming services. Well, if the streaming services are that good that it could raise Apple the way it has this week, then Netflix has got some giant trouble. If Apple's good, Netflix is going to crash. And Netflix is on our worst for the year list. Now, here's the news that came out over here on Friday. Germany and France PMIs, they dive into contraction area, like 47, 48 readings. Those are just horrible. Then the U.S. PMI comes out, and it falls to 52 from 53. And look at this. The yield curve inverts between the 3s and 10s, and the selling comes in as investors get absolutely shocked. When you get this kind of a big upside move and this kind of a reversal, there is something very significant about that. And like I've been saying, I think that the stock market has been in a place where it's been ready to peak. It just eked its way up through a important resistance area and now has failed from that very sharply. And I'm going to show you that as we get into our short-term view for the next week. The stock market for the week, really a volatile close to the weekend here, as we're right now just coming up to a couple hours left in the day. Basically, we're mixed to lower. The S&P 500 down small, the NASDAQ up small, and the Dow down small, and the Russell down big. That was after a huge gain on Thursday, and it gave it up. I guess they're weighing the difference between low interest rates and what that means for these companies and this huge slowdown that we're seeing here in the world and what it means for those companies. Russell made up of a lot of losing companies, and that is getting absolutely hammered today. Bond market exploding to the upside. 30 years up nearly 3 points on the upside in here as the 10-year yields fall 16, 17 basis points right now. The front end of the yield curve was already inverted, and that was a little bit to be afraid of. But today, at one point, the 3s and 10s, 3s to 10s inverted. And that's not a good sign. The last time it did that was 2007. And you know what happened then? Well, we went into the financial crisis. Got to wonder if this isn't leg 2 coming up right now as this yield curve inverts. And it inverts with a 2.25% Fed fund rate. This is historic. And we're going to see what that means going down the road. The gold gains about $10, moving up now into resistance. I'm going to show you why I think it's going to pull back as we get into the short-term view. The dollar chopped up and down into early part of the week, and in the last couple of days moving up sharply, gains about 0.3%, not a big gain overall. Oil, we expected that to get up to about 60. We'll show you that in the short-term view, and then fall, and that's what it did. It got up to about 60 and then fell. Strong dollar here on Thursday, Friday, not helping it, and also the prospect for this economic slowdown and the fact that, OPEC, which has been trying to keep the prices up, well, that's a tough fight for them, I think, based on the overall supply condition. So that's it for the opening for the show for this week. Just very interesting stuff going on. I'm going to show you the best and worst stocks for the week. All right, for the best stocks for the week, we're going to go to our weekly charts. Now, like I told you, Micron really kind of stimulated some upside move in the semiconductor industry sector. The semiconductor index is now up for the week, about maybe 1.5% or so. But it came up to an interesting point, and I'm going to show you some amazing cycle synchronicity as we look at the SOX. SOX. This is the Philadelphia Semiconductor Index. And we had some nice gains that were going on until Friday. And Barron's came out with a report, and they said that Macquarie came out and they sold off positions in AMD and NVDA and Micron. Now, these are stocks that were some of the big gainers this week, and they happen to be a buyer of Qualcomm. So this pattern that we're looking at in here, you can get a very good sense for cycle analysis. When you look at the larger brackets on the bottom, they show you the dominant pattern. There's also a half or a minor cycle in there, and you can follow the minor cycle and see how that lines up on the chart above, where it has the minor cycle right here and the second one, and that makes up the big cycle. The same thing right in here, and the same thing right in here, as you had this dip into the mid-cycle and then rally up, and see the big shooting star right over here in this multiple peak resistance? Well, that's a top that's likely forming. And now you can see that we're looking for a decline in here into the early part of May. That's very much the timing that we're looking for in the rest of the market. And we think the semiconductor stocks are done for now in this rally that they had, and now likely to move to the downside into May. The best case in here is that 23.6% right there, which is at about 1360. It is possible for this to fall down near 1300 here in the SOX. So I wanted to show you that before I showed you these stocks that did so well. AMD gains about 15% on the week, and you can see it's in a pretty good pattern. As a matter of fact, this low came right in the buy zone that we had here and then popped up and got pretty much up to the level of the target zone we had. Beautiful cyclicality in there, and this is not a bad looking pattern. I think that if it pulls back, it's likely to get another rally in there and then probably fall off into June for a bit of a correction. This one gains nicely, AMD. You just watched the opening to the askSlim Market Week show. To watch the full show, just become an askSlim free member. It includes my analysis on the best and worst stocks for the week and my short-term view in 5 major markets for the coming week. You're going to learn a ton about charting, technical analysis, cycle analysis, my unique way of looking at charts, and we show lots of ideas that may bring some great setups for you going forward. Here's what's in that great offer that I think you're just going to get a ton of benefit from. You're going to get the full Market Week show. You're going to get Market Week archives, the special videos from our premium library, sneak peeks to great new products coming up, and all kinds of things along the way that we're going to put in there that you're going to enjoy. All you have to do is become an askSlim free member, and there is no credit card necessary. Please do join and take advantage of that and watch the rest of the show.